So Steve, earnings season is here. What have we been seeing coming across the ticker, and what can we expect?
Well, leading up to yesterday when Alcoa kicked off sort of the unofficial start of earnings season, we saw a lot of, whether it was pre-announcements or whether it was companies who just report because their quarter ended in May, not a lot of great news. Forbes said their sales and business outside of North America has come under increasing pressure, not a surprise given conditions over in Europe. Nike reported a rough quarter a few weeks ago. Yesterday, Advanced Micro Devices said they expect their second quarter sales to be down 11%. Then we got the Alcoa report. Now, Alcoa's profits were down 81% from a year ago. That sounds terrible, but the expectations from Wall Street had been beaten down so much that they actually beat the consensus estimate. So the fact of the matter is, slower growth around the world is really weighing on these companies, particularly those in the commodity space, but expectations have come down so much that a modest beat can, boost the stock. Now, today Alcoa is down, but it was up a little in the aftermarket yesterday.
So you said expectations are really low. So do you expect, because of that, we'll have a lot of upside surprises on earnings?
I think we could have upside surprises in the sense that the actual earnings numbers are not as bad as Wall Street expects. Where I think people will really focus on the investor side of things and should focus is more on the outlook from these companies. We know the second quarter was a challenging time. U.S. growth slowed. Europe is obviously a mess with their debt crisis and with growth slowing. And China, we're looking at a hard landing there and what the implications are of that. So earnings in the second quarter are certainly rough. More important, and what I'm looking for, is what do they say about the rest of the year and what do they say about 2013? Because I think that's where you may get a sense of if things are going to continue to get worse or if there's a little bit of a light at the end of the tunnel.
So we're still in the beginning of summer here. So what's your prediction? Should you be walking away from the market, or is it a good time to be invested?
I think it's a good time, as stocks pull back, if stocks get hit hard and it's something you like, maybe you look at it a little bit more. The one thing you really have to be careful of here is there's always that risk of central banks coming in with a big round of easing, or if they do some kind of coordinated agreement or a new bailout package in Europe. There's all these sort of one-off items that could happen and they cause a big rally in the market, and all of a sudden you completely missed out. So is it a time to bail on things? I don't think so. Is it a time to jump in with both feet? Probably not the case either there. So we'll see what happens. We have the fiscal cliff issue later this year. As I said, the China hard landing scenario, and of course Europe. So still, steady as she goes, stay cautious, but hard to say whether you should lean one way or the other really hard right now.